Today we're going to take a look at business insurance policy reviews and objective analysis. Having reviewed thousands of business insurance programs as both a practicing broker and as a consultant to the private equity industry for firms large and small, I can say with confidence that there's a whole lot of mistakes being made in business insurance programs. I get it. No one is perfect, and I'm not pointing a finger at anyone. Mistakes are made by the biggest global brokers, the smallest neighborhood brokers, and the middle market brokers, and everybody in between. Mistakes are also frequently made by insureds who forget to tell their broker of a change in operations, the purchase of a new machine or location, or any number of other issues that happen during the course of a policy year. Errors in coverage programs don't reveal themselves until something bad happens, like a claim. The good news is that most organizations just don't have claims very often, so there's a good chance you'll never find out that a problematic design flaw in your coverage program exists. But that's also the bad news. You never know when a claim may occur or how serious a claim may be, and if that claim lands in your trouble zone, that design flaw may expose you and your organization to serious out-of-pocket losses. How serious? Hard to say, but here are the three major areas I frequently find problems with. The first is insufficient limits of property insurance, especially in the area of business income, which is also known as business interruption insurance. When property insurance limits are low on buildings and inventory, machinery and equipment, and there's a loss, you may be able to finance your way out of a claim, meaning you can, if you're underinsured, you can refinance that building and make up the marginal difference to rebuild. But if you're underinsured on your business income protection, which is intended to pay for ongoing business expenses, and lost profits due to a claim which shuts down operations, that's a different story. Financing cash flow at the time of a claim is difficult, if not impossible, since lenders know that businesses which experience a shutdown from a claim are likely not going to survive by a 70% margin. Getting property insurance limits right, including business income protection, is really important. If you haven't reviewed this in detail with your broker in the last 2 renewal cycles and completed a business income worksheet, you're probably underinsured. The second area I often see problems with is on the casualty side of the insurance program, where layers of high limit of protection are not coordinated properly. Now, you may be saying, well, I'm a small or medium-sized business, and I only have my primary policy and my umbrella policy, so this doesn't really apply to me. Unfortunately, that's not true. I've seen too many cases where a business has an excess policy which only runs excess over their general liability, but not their auto liability. Often, this will happen when an insured has their account broken up between different insurers or brokers. Broker A, who writes the liability policy, doesn't know that there's an auto policy in effect with broker B, so they only write excess insurance over the over the liability, and the auto is excluded. Or the broker will write an umbrella policy on a BOP policy, which includes hired and non-owned auto, thinking they're covering all the bases of general liability and auto liability. Unfortunately, if the business also owns an auto and insures it elsewhere, that umbrella won't pick up the excess protection because it only runs over non-owned autos, not owned autos, and this creates a very dangerous gap. Lastly, and the third biggest problem area, is with what I call specialty coverages. Policies like cyber, D&O, or employment practices. Many business owners and their brokers may think, well, I'm too small for those types of policies, or no one is ever going to sue me for employment practices. Now, I'm not saying that every business needs to buy all forms of specialty insurance. For smaller firms, it's just not economical to make these purchases. I get it, but it doesn't necessarily mean that you don't have those exposures. So what's the answer? The best is to understand what exposures you do have and what it would cost to insure them properly. For example, let's look at cyber insurance, a policy often overlooked by small firms, thinking that no hacker would attack them. Cyber can be cheap, like $1,000 a year for a small firm, so at least get a quote. Can't afford $1,000? Then maybe it makes sense to add it to your BOP policy. I don't like this option because the add-on type coverage for cyber is pretty skinny, but it's better than going bare. I guess with regard to specialty coverages, is to at least know what exposures you have and what it would cost to insure them, and then make a cost-benefit decision in your mind. Here's the bottom line. Business insurance is complex and confusing, but it's also critically important to keeping your business financially sound should a claim occur. If you're not 100% confident in what protection you have, then a comprehensive review may be the best thing you can do for you and your business. Now, I'm not talking about engaging a couple of insurance brokers to go out in the market and find you the best price. What I'm talking about is engaging an expert broker to take the time to review your policies, your exposures to loss, and your claim history to give you an opinion on the quality and the comprehensiveness of your protection. Some brokers will charge you a fee for this review. Others will provide it for free if you commit to moving your insurance to them. Often, it's going to depend on the complexity and size of your account. If you're interested in a discussion around a review, please contact me and let's chat. I work with small firms to middle market firms as a broker and consultant and would be happy to strategize how to best get this done with you. Thanks.